What's going on, everybody? It is March 5th, 2024. Day log episode of NQ live stream review. So if you guys were in attendance today, I think it was a really good learning session. There was a lot of gems dropped in terms of information, education throughout the entire live stream. So if you're new to the channel, if you're new to the videos, I appreciate it. But the style that I really go through in terms of the weekly schedule and how it's laid out is I do the weekly live streams every single day, and then I'll do the daily logs, which are recaps, and they also have teachings included inside of them. So a lot of my live streams and even these, they don't have specific topics. It's catered around to whatever the day was. And if I can create a teaching around it, I think that's the best optimal way to do so, rather than just pulling, cherry picked example out of the chart and doing a video over it. I think walking through it in real time and then even recapping it after is really, really useful for the student and for the overall experience. So if you watched today in the very beginning of the session, I was highlighting something specific, and it was really the key to why we saw lower prices and how I was able to anticipate that. If you were here yesterday for the daily log, you're advised to look at a certain number of factors coming into the open to the New York session. I was mentioning how if we started to drop off lower and we started to close beneath buy side imbalances and breaking bullish PD arrays, then I would elect to believe that we're going to look for lower prices. So go back to yesterday's daily log. I mentioned that specifically, and even rolling into today's session, I could see between the three indexes here that there was an SMT divergence, bearish. And that was kind of tipping its hand to me. That's what SMT is. It will tip its hand to you before the move will happen. But you need to see certain factors play out to confirm that overall SMT to you. SMT is just a confluence. It's just a tool. Some people have their theories of where you could just enter off of SMT. That's perfectly fine. It's your own style. I don't utilize it in that aspect. I utilize it as a first kind of flag to me. Okay, this may be tipping its hand to me this way. And once I see information to confirm that to me, then I'll go into the chart and I'll see if that's true. So today, what did we have? Looking at yesterday, we had ES printing a higher high in here alongside NQ. And this was actually last Friday. Look at YM. YM was creating a lower high. So if you look at the Friday or even this Monday high in here, look at where YM is. This high here, do you see how this high here didn't get above it? So SMT is when one of the three indexes is not doing something different. On bearish divergences, you're comparing the highs, and there could be either you're going to have two higher highs and one lower high, or you're going to have two lower highs, like you would have two YMs, and then you'd have one ES making a higher high. That's the only combination you're going to get. They all can be in different ranges, but overall, all of them will be weak. But the one failing to do so, like YM, will be the weakest out of all of them. Does it mean you have to trade it? No. It just means that all of them will be weak. Understanding where all of them are at, it can help you in which one will be the weakest / strongest. So I get questions around SMT. How do you utilize it? What time frame? I utilize it on every single time frame. It matters. So if something like this is happening on a daily time frame, which is the parent, what does that mean? You're probably going to see a huge shift in sentiment and probably your overall bias / narrative for the day, week, or month. And you're going to see larger moves. So the higher the time frame the SMT is on, the larger the move, the larger the shift, the larger the impact of it. When you go down to lower time frames, you just have to minimize it. It'll be the lower amount of impact, lower amount of movement, but it can still be significant. It just depends what time your frame you're utilizing it on. And if you have multiple of them confirming to you, like in here, we had what? ES printing a higher high, and we have, this is the other combination of SMT divergence, is when you have one higher high and two lower highs. So look at YM, look at NQ, both printing lower highs while ES is printing a higher high. So that's a 1 hour. Also bearish SMT divergence at the highs in here. So rolling into the New York session, if you looked at my live stream, I was annotating to all of you that we should probably be expecting lower prices, and we should shift our focus to lower prices and look for discount areas to focus on. So we came back into this reclaimed inefficiency in here. Right smack dab to the CE of it. Beautiful. So we collapsed lower. And here, as far as tomorrow, I'm gonna have to see how things play out. It was a very large movement today, so I'm not going to expect, I don't know, obviously I have to work with the information given, but I'm not expecting a huge sell-off tomorrow. It may do what I was expecting on Monday. We may have a day where we have to create a SIBI in here. So tomorrow it may look like a smaller range day where it sets up a SIBI, and it'll kind of be like a balanced price range in here if you look to the left of you, because it's one pass up, one pass down, may create a SIBI in here. That's kind of what I'm anticipating. So with that expectation, I can't really just keep trying to short this. I may have an opportunity to do something tomorrow, but I'm not going to expect a large range movement out of it, right? I talked about, even if the bias is changing, even if the overall sentiment is changing, but you reach into an opposing PD array, or like this BISI, I'm not looking for this to go higher. If I'm looking at overall bias narrative switch, all I'm looking at is the opposing arrays are just going to give a short-term relief, a short-term retracement on lower time frames for it then to continue lower. That's what I'm looking at. Look at the weekly in here. I would like by the end of this week to completely overlap this up close candle, and for this to create a bearish order block. That way we roll into next week and we utilize that bearish order block and we send price lower. Looking at the monthly, this is very important that you're going out to these higher time frames, paying attention to it. Look at where the monthly's at. So we may have power of 3 just opened up, climbed up higher, and now we're seeing lower prices. Personally, I think that we could possibly see this get completely overlapped and this turns into a bearish order block. Just my personal opinion currently. Doesn't mean it's going to happen. If it doesn't, you know, it is what it is. It's not anything to me, but I just like to predict and analyze and see where price could possibly go. On the 4-hour time frame, I was annotating in the New York session how we were already beneath this 4-hour BISI. We talked about this yesterday. If we got underneath that, it's basically the last point of interest. I really didn't want to see us travel down beneath that. And coming into the New York session, looking at that, analyzing it, I was like, all right, well, I have to switch the overall, because what I was looking for was higher prices potentially going into the day. But I also was looking at the other side, the other argument, and saying, well, that is now really valid. The other side is not valid anymore. So keeping that open-minded and keeping the other side open is very important. It's what I talk about constantly, even throughout the session, even through intraday trading. You have to constantly do that. It's not you switching biases and being wrong. I get that question so much in that comment a lot, but it's just personally how I trade, and I advise it to all of you. As long as you're able to see with clear evidence that it's switching from one side to the other, there's nothing wrong with keeping an open mind. Not marrying a bias is, to me, it's very useful. So in here, there's a small SIBI. We traded a lot lower today. More than I was anticipating. I was talking about on the live. I just didn't know how far price wanted to reach today, especially when you're switching an overall narrative standpoint, when you're going from a bullish narrative on a higher time frame and then you're switching to a bearish. On the first day it's doing that, it's hard to see, all right, well, how far is price really trying to reach into? How far are we going to go? So things can be a little bit difficult. And today I didn't take a single trade. So I have 2 days this week with no trades. Wow. That, for some of you, you know, that's like, wow, you know, it's almost impossible to do. And I understand. And some of you may look at that as a victory, and some of you may look at that as a defeat. I look at it as a victory. I think it's very, very good, especially when nothing presents itself. I can't force the market to do anything. It's not like my model is flawed. Doesn't mean the concepts are flawed. We're still able to see exactly where price was leading into, but there just wasn't anything that was presenting itself to me. We talked about the analogy of the bus. You know, sometimes it leaves and the doors don't open. You can't get on the bus. You can't get on the ride to the next destination. But guess what? The bus will come around tomorrow and it might open up its door for us. If it doesn't, I won't take a trade. I come into each week with the mindset of, if I don't take a trade this whole week, I'm perfectly okay with that. And what that does is that gives you relief to be patient enough. It actually, ironically, lets you trade comfortably and not force trades. It doesn't force you into setups. I come into every single week, every single day, saying to myself, I'm comfortable with not even taking a trade today. The market must meet me at X, Y, and Z. It must meet me here. If it does not, I don't do anything. I don't force myself in a market. I don't force my model into the market. It's very, very key you do these things. It's the reason why I repeat these constantly over and over and over again. So it all embeds into the audience's mind, really. So rolling into the New York session, I was annotating, even yesterday, I was annotating this specific BISI here, this discount, right? Because we were looking at this potential bullish dealing range, how this could have potentially sent price higher. And that's why I like waiting for the New York session, even waiting for Silver Bullet, because by then I have enough information. Time did the work for me. Well, I can see that that's not valid anymore. I was talking about the SMT, I was talking about all the other things and saying, all right, well, now I'm looking for lower prices. Okay, well, where can price reach into? Well, this previous low here is the nearest low I can use as a target. So price opened and immediately dumped towards it. We had a news event driver 1/2 hour after the open. So I was electing to wait for that. Once that played out at that point in time, there was nothing for me to even sell off of. So sometimes, like I mentioned, you just miss. You don't even miss anything. It's just you not being a part of the market, and it's fine. It's going to happen to you a lot throughout your entire career. You have to get used to it. There's nothing that's going to solve it. There's no magical concept that's going to get you into the market. And if you're not okay with that, then obviously I'm not the right mentor. I'm not the right teacher for you. And I don't think that you're going to ever succeed trying to search for that. I think that's a fallacy and you're never going to find it. So teach his own. But days like this, I don't feel any emotion about it. I'm trying to really get it into all of the audience's head when your model doesn't print and the market moves a lot. It does not mean you missed anything. Like you have to understand the clear distinction between the two. Missing a move to me is when the market prints my model within my certain time zone. Everything's aligned and I simply just watch it pass by me. Those are the trades. If I miss, I'm upset at myself and I'm going to critique myself. But I rarely do that because if I see it and everything aligns, I'm taking it without hesitation. But days like this where my model doesn't print, but I know the draw on liquidity, I know where price is leading into, that's going to happen to you a lot. I for a lot of times I know exactly where price is going, but my model doesn't print. Does it mean that my model is flawed? No. Doesn't mean the concepts are flawed. It just simply means it's just a day where you have to sit out. So I know it's a broken record, but it's very important that you hear these things over and over again, so you remember it. If you look at the open today, we immediately just drop off lower. There wouldn't have been anything in here for me to enter off of. Even looking at the 5-minute time frame, I was annotating this SIBI in here, and I was looking at the opposing idea of, well, if this thing decided to go higher, there was some buy side above us. I could have potentially looked at that as an opportunity today because I didn't know how far price wanted to go off lower. I was looking at this as maybe the potential low of the day. But again, I have certain rules that will protect me from even chasing a long like that prematurely. I was saying, well, if we get above the SIBI, then I could look to go long. And even if we got into the SIBI when we started to sell off, I still could be a part of the move. I could still be watching that, be like, all right, well, now it's really trying to sell off, and I could go into lower time frames and get into the trade. To me, I have so many tools at my disposal that it's really not a missed trade. So in here, we never even got up into this inefficiency. There's nothing I would have sold off of. Even looking at the 15-minute time frame, we were looking at this SIBI and it IOFED'd it. But when I'm looking at a trade setup, I'm looking at the risk to reward, and mainly I'm looking at the risk. If I was to enter an IOFED, you have to remember you're not going to get the very high. Mainly, you're going to be looking at this. So my stop loss at bare minimum would have to go here. That's 50 handles of risk. And if I really want to be secure, I have to put it above this high. And that's 66 handles of risk. So I'm not comfortable with that. I can't do it. And mainly if I have something like this, where this is the 15-minute SIBI, if I have something like this where it's coupled, I would want the 5-minute to be tagged as well to be comfortable with IOFEDing the 15-minute. And it never even reached up into the 5-minute. It just sold off. And then when I look at the 1-minute, there was really no entry patterns. There's a small SIBI here, but when price is selling off like this with really not a really deep retracement, I'm not trying to catch I'm not trying to chase price, nor am I trying to reverse this. So all these little entry patterns in here, I even mentioned it in real time. I was comfortable electing to wait out of it because on another day, on a flip side of the coin, this could have easily reversed and gone into a deeper premium on like a 5-minute, a 15-minute time frame, and these 1-minute SIBIs would have been completely ran over. Again, you're never going to reach a point where you're going to know all the profiles, all the days, exactly when you should short, when you should not. It's just something you're going to have to get used to. You're not perfect. You're never going to be perfect. You're never going to know all the answers. So you have to work with what you got. And it doesn't mean that it's flawed, and you can work with very little and be very successful. I can't wait to showcase, this week. I don't like to hope, but I do really hope that this week, tomorrow, the next day, I'm able to catch a trade for, let's say 50 handles or a little bit more. And that's the only trade I'm going to take for the whole week. And it's going to show how well patience pays off. You don't have to do much to make a lot of money. You can elect to wait out multiple days and not trade it, especially when there is a high probability model. To me, it's very, very good discipline and patience. So even in here, I'm sure a lot of people got chopped up trying to take the longs, trying to reverse this. I'm not trying to catch a falling knife or reverse something that's completely sold off. I find that low probability. I want to work within the narrative. I want to stay within the narrative. And if I don't have any short-term retracements back up into a premium, then I can't do anything. It just continuously kept selling off. And then at the end of the day, the macro, we had this, nice retracement higher, and I wouldn't have done anything there either. So to me, my time and my valuable, where I place my values is within time freedom. So after I'm done with the AIM session, I don't even look at the PM session. I don't do it anymore. I get off the charts. I go enjoy life. Like today I went off and I went fishing. Like I just enjoyed life. I know the markets are going to be here tomorrow. I value my life over these charts. Some of you are so sucked into this life where you can't detach yourself from it. And trust me, I've been there. I've sat at these charts for 10, 12, 16 hours straight. It's miserable. It's not a life you want to live. You have to be willing to understand that these markets repeat, these concepts repeat at the same time every single day, regardless of your participant of it. You can make money eventually. Like you don't have to do a lot. I hope you guys learned that today. The main emphasis is you don't have to do a lot to make a lot. You can do very little and make a very great living out of this. Again, this has to go off the concept of capital and having a large allocation of it. If you have very little allocation, then obviously you're going to look at a lot of these moves and be like, damn, like I have to be a part of this to make a lot of money, or at least make enough to, pay bills. But I feel like that's the actual issue. There's so many funding opportunities, it's ridiculous right now. There's funding everywhere at your fingertips. It's just acquiring it. And once you do, it's easy to make money doing next to nothing. So that's gonna be it for today's video. I think that's enough rambling. I hope you guys enjoyed. Hopefully it was insightful. We'll be live 15 minutes before the open tomorrow. Till then, good luck and good trading, everybody. Peace.